Hey there, and welcome back to Approved AF, the Mortgage Licensing Podcast, where we cut through the chaos of mortgage licensing and compliance so you can focus on growing your business. I'm your host, Catalina Stepanoff. Today's episode is a must listen if the word audit makes your stomach drop. I'm joined once again by Ryan Kinch, the CEO of LicensingStore, who has seen firsthand what happens when regulators show up and how companies can stay ready year-round. We're diving into what actually triggers an exam, the documentation examiners really want, and how to avoid landing on the regulators' naughty list. If you're a broker or a lender scaling into multiple states, this conversation could save you time, money, and stress. So let's jump in. Hi, Ryan. Welcome back to Approved AF.
Thanks for having me again.
You've seen inside a lot of companies when regulators show up. Give us a sense of your background and how your legal expertise has played into licensing and audit support.
Sure. So, I guess first of all, when you get licensed in a particular jurisdiction, or you start to look at expanding your business, I mean, um, it's not a matter of if you're going to be examined, but rather when. It's not something to be fearful of. I think it gives a lot of people anxiety because it's a big unknown. But the regulatory examinations is more of a an opportunity to you know do some potential internal housekeeping with policies and procedures. It's a way to kind of do a health check almost, and the results of it are not something where I think people should be afraid of. I think it's more of a it's a learning opportunity, and an opportunity for your business actually to improve, to get better, to become more efficient, um, to become more compliant. Um, Regulators don't just show up anymore at the door. I mean, they certainly can, but how it works, these days, and how it's worked in my experience, I've been, through uh, several hundred state regulatory examinations, plus some ones at the federal government agencies. And typically the way it begins is there's a notice that gets sent to a point of contact, indicating that, hey, we're going to commence an examination. That's you know not because you're being singled out. It's just probably because it's your turn. Whether that's through lottery, or based on the time you've been licensed, or how much volume you do. They all have their own internal metrics for deciding when a company is due for an examination. Um, and it's not that you're being selected or singled out. So you get the notice from the examiners that examination is going to commence. They'll typically ask for an acknowledgement, and it'll be followed up by a questionnaire, which will have some basic questions about the company, its financials. Advertising is usually one that's hit pretty big. And then depending on the jurisdiction, it's either what they call a full scope exam, where they will look at not just the overlying health of the company, but also select certain loan files to review them for compliance. Or some will be what's called a targeted initial examination, where they will come in, especially for newer licensees, and discuss common findings that they see over the course of other exams. And that's a way to prevent compliance issues before they even start. And so it gets back to kind of the regulatory nature of it. and then they've each got their own kind of independent system for how you go about responding to their questions.
So, for listeners who just launched their mortgage company this year, what is something that they need to understand right now about the state audits or exams?
Um, I mean, for one thing, it depends on the state that they're in. But I mean, if I could say the biggest, I guess, you know, thing to be mindful of, or to um, to make sure that you're doing, if nothing else, is ensure that your data is accurate. Especially your data in your loan operating system. So what the status of loans are, when they've gone dormant, when they are adversed or suspended. Um, these are things that a regulator is going to base their review on. So it's crucially important to make sure that you're continuously statusing your loans. And then I think the other thing that um, uh, new broker owners especially should be mindful of is, um, if- do you have a set of policies and procedures that are tailored to your business, and do you have a centralized spot where your staff or stakeholders can access those. A policy doesn't do you any good if a it's too cumbersome to where you can't follow it, or B, nobody knows where it's at. So, having that, available, whether it's through a company intranet or, a shared drive, uh, just making sure your staff knows what the procedures are, and how to, go about things is going to, go a long way.
So, you said when audits are going to be taking place, they usually are um, given a letter of some kind. Is there anything that actually would trigger a regulatory audit or a review? Is it ever random or are they always planned?
Um, there's certainly some things that can trigger an audit. You know, consumer complaint, for example, especially if you've got a significant number of them coming from, uh, you know, uh, the same area or about the same topic. I mean, that can trigger an examination. Sometimes there'll be other states that are examining you, and maybe a sister state will jump on that exam, um, and adopt their findings. We've seen that happen with some increasing frequency. Um, there could be potentially other ways that a regulator might do what they would call an out of cycle audit. But for the most part, there's typically a routine schedule, and then I think where things start to vary is based on how you perform on that first examination. Um, will probably dictate how soon it will be before that state will come back. If you score poorly, or they don't find the compliance position to be satisfactory, odds are that they're going to return sooner rather than later, to do another status check, and they'll
You've
give you.
basically been put on Santa's naughty list at that point.
Yeah, more or less, yeah. I mean, there's a way to, to get off of it, but you've been put on notice. After every examination, there's it's typically an exit interview where key stakeholders, company ownership, compliance, staff, any consultants that you have, will meet with the examiners. Usually it's by teleconference, and they'll discuss their preliminary findings. Kind of go through the Cliffs Notes version. Usually after that, you know their findings go through a peer review process at the state, where a more senior examiner will look at them, uh, you know kind of sign off or make adjustments if warranted. And then there will be an official report of examination that again comes to the company, and the company will be given so many days, depending on the state, to provide a response. It doesn't mean that they have to provide immediate fixes, especially if there are complicated issues that may require adjustments to internal procedures or technology enhancements. But they will want to know typically by written reply what is it that you intend to do about what we found.
Mhm. So, what kinds of documentation or activity are the regulators typically looking for when they come calling?
Um, They usually do it in segments, and a lot of times it depends to some degree on what your business model is. I mean, if you're a broker versus if you're a lender or servicer, um, a lot of times the questionnaires that they send, we call them a PERQ, which is pre-examination response questionnaire. They're set to the least common denominator, so they'll assume that the examinee is brokering, lending, and source. But if you're broker only, you just answer the broker specific questions. Um, in terms of areas, I mean, in theory, they can examine any particular component of the business that they deem appropriate. Um, Usually, it's in segments of they'll look at your financial health. So do you have required net worth, liquidity? Are your financial statements prepared timely? Um, and then they'll look at your transaction history in terms of your bank accounts and have you been maintaining that worth? Where your payments going? So there's kind of a financial component to it. There's a human capital component, which is your staff. Um, are they paid W-2 or 1099? Do you run background checks on your personnel prior to hire? Keep complete employment files of these. Payroll records, same thing. Are you paying your commissioned employees consistently with your originator compensation plan under Regulation Z? Um, what job duties are your people doing, loan officers, processors, but then also loan officer assistants, closers. I mean, there's any number of roles. So that's the human capital component. Then there's a compliance, policy and procedure component. This is where they really, drill down into the company's internal operating policies. And that's divided into subsections. So we typically see a subsection on policies about Bank Secrecy Act, one about information security, one about loan officer compensation, training and safe act, and data privacy. And which are escaping me at the moment, but they're broken down into many segments where they'll take a look at your policies, procedures going off of those policies, and then you know potentially do some testing to see if you're in fact following your own policy, and then report back on that. And then there's a loan file component where they will ask for a log of um, loan files that you've done during a specific period of time. You'll send that to them and they will sample loans off of that and then ask you to produce the complete loan file for the ones that they selected. And they will go through that loan file and review it for compliance. So that starts, with the 1003. And use that in the file. Is the all the disclosures there, state and federal? Does the loan estimates, subsequent loan estimates coincide with a valid change of circumstance? And we get into the closing package, closing disclosure, exactly mirror the amounts that were charged on the invoice for the credit report, that type of thing. And then they'll cite any uh, issues that they find there, which are typically either missing documents or there might be a fee discrepancy, and they'll ask you to make restitution. I've seen restitution request because a credit report fee was overcharged by 25 cents on the closing disclosure. And so you literally have to write a check to somebody for less than what the stamp costs. But, you know, that is the rule.
So they can basically ask for any document that so pleases them, but the ones that they are looking for is kind of just a completeness and accuracy check. So keeping your data clean and tidy is something that is going to be essential for businesses as they start off and grow.
Yeah. I mean, your what I call the metadata. So the data that's, within your loan operating system that, would be extracted by way of a Fannie Mae 3.4 file. Um, you know, essentially, um, information that you could, plug into some kind of a, you know, pricing engine or fair lending, regression test and look at the, various terms and fees of the loans. And then the other thing that I really would encourage people to remember to do is um, have your own system of record for loan files. Should be stored securely. Usually you can do that in your own operating system. If not, you can use Amazon, Glacier or OneDrive, any number of file storage systems out there. And you want to make sure you have some security around that. But one of the things we see quite a bit is incomplete files because, especially with some brokers and some correspondents, they will do the initial package, but then the closing package, that just goes straight to the lender, and they never get a copy of that back from the lender to put into their own file, and they find themselves kind of running around chasing, account executives at wholesale lenders asking for copies of, certain policies, certain, loan files that have been selected for examination. And some lenders, have an easier way of, uh, having brokers, uh, collect that data out of their system, but some, don't. And so I think the moral of the story is no matter who the lender is, your obligation as a broker is to have, your own file retention system that contains a complete copy of, that loan application package. Even if, the lender did, all the disclosures and, the docs were sent back to them, like you need to have a copy of that as, uh, as the broker or as the partner.
That is your responsibility.
Yes. Yes. There's a dual record keeping requirement when it comes to loan files. Um, and you know, take to that end, take information security protocols very seriously. You know, make sure you have strong password logic to access loan files, that they're segregated on a need to know basis. Um, if you can put them in some kind of semblance of a consistent stacking order, that makes it easier to know what you have and if you're potentially missing anything. But you always want to keep a copy of any documents that are issued, whether it's by you, if somebody else is helping you generate your docs, or anything that a borrower may send to you. Um, have your own copy of that because it may be selected for an examination, and who knows, I mean, maybe you know we're doing business with a particular lender who had it, and now you're not, or that lender went out of business. So you you never know in that regard, and that's why it's important to ensure that you've got your own components so you don't get cited for essentially not having the required documentation, because if you can't produce it during the exam review, it's as if it never went out.
What are some of the biggest mistakes that you've seen companies make before an audit has even started?
Um, biggest mistakes. I mean, I think that again, I wouldn't characterize it as mistakes. There's a learning curve for everyone uh, every day, and it gets back to like the constantly be trying to get better and improve a little bit um, each and every day, and especially in the very beginning, that can be very confusing, right? As to I don't know what I don't know. Um, so I think that trying to educate yourself, if you whether you're just starting or you enter into a new jurisdiction, um, so I wouldn't say it's a mistake so much as a you know be proactive about things. If you do get a new state license, for example, a lot of times regulators will have on their websites common exam findings. Here's a list of our state rules. You should take the time to read those. A lot of times they're distilled down into an FAQ, so it's not like you're trying to read dense statutory text. I mean, the end of the day, to realize that regulators and business owners, they want the same thing. They all want compliance. They want, the consumers to be protected. And so view your, regulatory authorities as a resource to help you. I mean, they're not always going to be able to answer very fact intensive questions, but they do have resources available that should be reviewed. Kind of going along with that, if you do enter into a new state, subscribe to that state's regulatory newspaper. And a lot of times they'll put out monthly or quarterly bulletins, and those can be helpful. You know, doesn't take you more than 15, 20 minutes sometimes to, um, you know, read that and, ensure that, you're kind of staying abreast of any changes in laws because they can and do change frequency. Or you can retain licensing store and then we can have those conversations with you. Um,
I mean, I that's probably what I would do. I would definitely look at getting somebody in my corner who has the knowledge base to do that instead of me trying to take the time to kind of parse that out when I could be doing other things. But, again, I'm not a lawyer, so.
well, I mean, I think it's, uh, you know, making an effort to, um, if you don't understand, ask questions. I mean, nobody can be a master of everything. Especially if you're have a very wide lending profile. I mean, there's too many laws out there for any one person to know them all. Um,
Mhm.
but when you have consultants that are there to help you distill some of that down. I mean, that's not a reason to, say you figured this out for me. It's, we're going to help you, you learn and importantly, understand. And sort of along the lines of, you can lead a horse to water, but, you can't teach him to drink. I mean, you got to be able to, um, help people, I guess, get to a point where they're understanding or at least, know where to go to ask the questions if they don't.
Can you share a real example? Because you've been through quite a few audits at this point in your career. Can you share a real example of a company that experienced a rough audit so that other people can learn something from that experience?
Um, sure. I guess it, it probably depends on what the issue is. A lot of times we, uh, you know, come in sort of, mid conversation when, the die is already cast. At the end of the day, remember that an examination is, a reflection of what, has happened during the examination period, which is in the past. and we can't go back and change the past. So, yeah, a not so rough finding sometimes is like, hey, you didn't file your call reports timely, like you missed it by a day, or if I was the 15th, that's really due on the 14th. Uh, if the NMLS was down in the evening, for example, on the due date, there's any number of reasons why a company might be late. They can't go back and change history. It's more of a you know we're aware, and we have processes in place to ensure that that's not a recurring issue. Um, yeah, I think that companies that if you have a rough audit, I mean, the biggest thing that you can do to you kind of mitigate that is set proper uh, what they call tone at the top. Um, you know, Examiners are going to want to see leadership, management involved, and setting proper examples. And they do not expect you to be um, perfect or free from error or anything like that. I mean, I've had state examiners tell me, point blank verbatim, if I don't find something, I'm not doing my job. Like,
Mhm.
and a lot of times it's very nitpicky, but um, you know, that's what they're there to do is you know find issues and cite for them, and then those need to be taken seriously. But if they see that you know, the company is committed to compliance, and you're paying attention, and you're not perfect, but you've identified an issue, and you know hey, you fixed it. Like, if that comes up at an examination as a regulator, if I'm examining you, I'm actually given comfort by the fact that there was a violation, and you went about curing it, um, because it shows me that you're paying attention. And I know that if you're paying attention to these issues, then you're a safe you know, partner for my constituents, which would be the people of the state of Ohio or Michigan or Virginia or wherever. Um, that's what they're, I think, looking for is are you a responsible party, and are you somebody that is going to ensure that you're doing right by our constituents, because their charter again is to protect the people of the state.
Does a company's risk profile change as they expand and grow into multiple states or as they expand their team?
Oh yeah, uh, all of those things are kind of expanding risk profiles. So whether that's going into a new jurisdiction that has completely different laws. I mean, even for example, going from title closed states to attorney closed states, or um, potential or states where they have um, restrictions on wet funding versus dry funding. Those can be areas for um, where companies might get tripped up. Obviously, if you're expanding your headcount, um, there's sometimes where a company will wind up being, a mile wide and an inch deep. Um, and those are things where eventually you'll need to have support staff and infrastructure in place. We'd all love to have, I mean, 200 loan officers, and and that's all we do. But at the end of the day, like, those loan officers, they're going to have questions. They're going to want to know how to do things too. And so having the infrastructure in place, whether that's that technology, whether that's staffing, training, some combination, uh, all those things kind of play into what the risk profile is. Kind of like a, the potential areas of risk for a three-person company is going to be a lot different than one for a 300-person company. I mean,
Do companies often forget to update or adjust things like their policies or procedures as they scale?
um, sometimes, yeah. I mean, I think one of the big things there is that's why it's important to have an annual review of your policies. Um, because then you can account for things that might have changed between when that policy was either implemented or last reviewed, and what the situation is now. Um, I mean, one of the things that we see a lot too is uh, something will come up on an examination, and then an email will go out, right, to the whole staff saying, hey, we're changing what we do, and here's why. And so from now on, and instead of doing you know and I'll just use a silly one, instead of eating an apple for lunch, you're going to eat oranges for lunch, right? um and that memo goes out, and everybody is in agreement. Well, the next person that you hire after that memo went out, they didn't get that information. And so, how do they know what that policy is? Because they weren't around when that went into effect. So you're either going to constantly have to be reminding people of that, or you're updating your policies, and really having a robust training program as well, that allows you to um, convey that institutional knowledge to new people.
What's one thing that growing companies think that they're doing right, but actually is causing problems during audits?
Think they're doing right, but actually causing problems during audits. Boy, it could be a few examples there. I mean, I guess if anything else, that could be more of a compliance question so much, but um, what kind of, getting back to at the top, cultural type of culture are you adopting? I mean, I think especially companies that experiencing a very rapid and explosive growth. I mean, that's great problems to have, right? I mean, people want to be at your business, they want to come there, work there, but then the mindset is still that we're this small 6-person shop, and we all work kind of in the same room, and then go to the bar for happy hours afterwards, and we're just the best of buds, and that's great when that is in fact the case. You do operate like a family. um when you're 200-300 employees strong, I mean, you show me a 300-person family. Like, that's, not how things work at that level. There's distance between the the core group and new hires, especially people that are sort of the legacy that have been there since the start, and somebody that comes on. I mean, they're going to bring fresh new ideas, and that's great. And you just got to make sure that you're trying to balance you know integrating that with the company's overall culture and mission statement.
Mhm. What can a new company start doing today to make sure that they're ready when the audit letter arrives?
um I think doing a temperature check is the easiest one. Is to do your annual policy review. You'll get them all in one spot. Put, even if it's a centralized folder, and start there. Um, and if you don't have policies, to review, well, that's one thing that can be right away. Um, I think number two, look at a training program. I think a lot of companies, that's an answer to one of your previous questions. The BSA Act, for example, they have a policy, but they don't know that mandatory training is required for everybody, not just for loan officers, for directors, for the processors, for receptionists. They're all required to be trained under the Bank Secrecy Act. And a lot of companies might think, oh, the loan officers, they take training in the NMLS. That doesn't count. So implement a training program for that, and then expand on that into other areas of importance. I can tell you, just as an owner, I mean, where do you think the risks are? Number one would be information security. Yeah, the last thing you want is a data breach. Somebody to
Uh-huh.
hack into your system, or a phishing attempt, or some sort of intrusion. So you should have data security training, information privacy as well. After that, I mean, are we treating people fairly, both in our customer base and in our employment, within our workforce? So that would be fair lending, for certain, and then non-harassment training for the work staff. And so as you start to think about that, you can build out a training program. So where, I mean, it's not number of ways to do it, right? There's a lot of vendors out there that offer, you know, hour-long videos. You can get curated training curriculum. I mean, we have, a couple of vendors that we work with that will offer that.
Yeah,
That's
we actually had Angie from OnCourse on for episode number 7, and we talked about BSA training and how important it is for everybody in the company to do that and why it's so important. And like you said, it's a simple thing to get enrolled into and make it part of your culture, and even Angie talks about that, is making compliance part of the culture of your company and setting that from the top down.
Yeah, I think so. Again, uh, that's the tone at the top, and as new people come in, I mean, they'll just be used to that because that's just the way it is. And you know, some, I think, companies struggle because they try to overtrain, where it's like, you know, not everybody, for example, needs to be trained on, the civil service members, your relief act. I mean, or certain elements of non-QM, or even HMDA. I mean, if you're a broker, you don't need to take HMDA training necessarily, because HMDA is not for you. So, what are the core, sort of global courses that everybody should take? And then you can kind of make each month sort of dedicated to a particular subject area. And sometimes that's an easy way to, space things out. Everybody takes a minute to, you know, pay attention to, a specific area of compliance. It's easier at that point to kind of remember, or get that, the lessons, ingrained, because it's
Mhm.
not like, "Oh, I'm going to do that in January," and then January comes and you blast through it in a weekend. I mean, that's checking a box, but does that really help you keep your data safe? So, if you do more of like a calendar of it, and spread it out, not like you have to do it every day, right? But require your staff to, stop for a minute, breathe, like, just take a pulse check. Um, we're going to discuss, this. I mean, whether you do that at your, if you got a weekly staff meeting, or if you've got some kind of, all hands call, just devote a segment of that to it. It doesn't have to dominate the news cycle, but people will get used to that, and they will get used to having, a mindset of compliance, while still understanding that, hey, we're running a business here. I mean, we need to, focus on serving our customers, originating loans. Um, the compliance stuff becomes muscle memory. When I get it from my computer, I control delete it, I lock it. I set the screen to, auto lock after 3 minutes of inactivity. I mean, just because. And that's how, they're just sort of, train it into, muscle memory to, have a mindset to keep, information safe, for example, is by having that program for me straight out of the gate. Um, you know, there's lots of other things that, you can do at a corporate level, require strong passwords. I mean, you know, everybody's used to that by now. Require passwords to be, reset every, you know, you have to do it every month, like do it every 6 months.
I mean, we all hate it, but it's for the common good and it's to protect your information and the information of your clients.
Yeah, I mean, almost every title company, if not every title company that you work with or escrows, I mean, guarantee in their signature line it's going to say something about, you know, wire fraud is on the rise, and they're not wrong about that. And I, experienced, a few instances over the course of my time in the industry where, um, yeah, people were actually on the wrong side of that. It's very easy, um, for somebody to kind of breeze past, if you don't have that, compliance mindset, you know, heightened sense of awareness, ingrained, you know, you can breeze right past, an attempt for somebody to act as a, imposter or an impersonator. I mean, that, happens, more often than we'd like to think. And so just having people have an awareness of that is, I think is really important.
How can brokers use audits not just as a way to survive, but actually improve their business?
Sure. I mean, I think, certainly looking at, any, uh, findings with respect to loan files themselves, a lot of times, one thing that will come up is if you have cleaner loan files, um, with respect to your audits, that probably means you're going to have cleaner loan files that you're sending into underwriting, which means they're going to come out cleaner with fewer conditions. So, paying attention to those findings, and also kind of knowing, what's a material finding and maybe what's not. Um, if you have 100 files reviewed, for example, and they, cite you once for, you missed a signature on this disclosure, I mean, that's maybe not something where you need to reinvent the entire company. Like, you could just say, that sounds like an isolated incident, we'll,
Mhm.
do a, an FYI to, whomever was, assigned to that, and we'll just kind of continue to keep an eye on it. Now, if they, find that 10 times over or 20 times over, it's like, okay, this is happening more often than, you know, what's just, chalked up to statistical noise. And so maybe we need to, take a look at how we get ahead of that. I mean, there's different ways to do that. Sometimes it's a process adjustment. Sometimes it's, additional training, or, FYI to, the affected business unit, whether that's loan officer or as processor. A lot of times, what's really effective is a system control where you program a technology, um, stop in your loan operating system that will prevent the, you know, something from moving forward until this document is uploaded or that's signed. And again, people will start to remember that, and you know the system eventually won't need to stop you because you've already completed it. And
Uh-huh.
with those types of scenarios, I think that once your file goes in, it comes out cleaner. You're also less likely to have issues about restitution. If you, for example, overcharged on an appraisal or on a credit report. Um, and some states have very unique rules that just aren't applicable anywhere else. One example I'll just give you is New Hampshire, right? You know, typically, how it works is the borrower pays all of the transfer taxes when a file is processed. So the transfer taxes are disclosed, upfront on the loan estimate because it's the borrower's responsibility. Um, in New Hampshire, the transfer taxes by rule are split between the borrower and the seller. So, you know, you'd be over disclosing if transfer taxes on a file, for example, were $100, say. Um, you know, normally the buyer would pay all $100 of that as a closing cost. In New Hampshire, they're only responsible for 50. So, you know, put 50 on the loan estimate, not 100, because the seller is responsible for the other half of that.
Hmm.
I don't think that that's a rule, anywhere else. But that's certainly something that can, help you. It also makes your loans look a little bit, better for your consumers because the loss is lower. At the end of the day, it usually gets caught on the closing disclosure, and because you overquoted, and undercharged, you're, you know, not going to get hit with restitution versus the other way around, where if you're underquoting and overcharging, you definitely will. So, you know, but it's still, again, it makes you, more competitive because you ultimately you know, the fees associated with the loan will just be that much less. Another one that comes to mind, just real quick, Georgia, for example, they have a $10 fee for lenders that is collected at closing. And a lot of lenders, when they first get licensed there, they're not, aware of that. The fee still has to be paid, unfortunately. So you don't want to be in a situation where you never collected that $10, at disbursement, and then you close, you know, 200 loans, let's just say, in the state of Georgia. Uh, Now you have to go and pay $2,000. Um, like, you'd rather,
Yeah, $2,000 when you weren't expecting it
yeah,
can
that's
be very
exactly
shocking.
that's not, that's not a fun thing to realize. So, um, yeah, that gets back to, again, getting into a new state. Yeah, we try to do this with some of our clients where, when they enter a new state, we'll give them an FYI. I mean, it's not you know, a comprehensive list, by any means, of all regulations, in a particular state, but, some of the more common ones we try to draw to their attention. So then that way, it's preempted and they're not finding out the hard way.
What's one piece of advice that you would give to a mortgage company owner who has not yet been through an audit, but they want to stay ahead of it?
Um, Other than, again, kind of doing a health check of your your internal policies. I mean, I think, yeah, making sure your data is clear, kind of having a good understanding of just the numbers of the business. So, what's your employee head count? Do they have complete employment files? Are you, running those background checks? You know, I mean, I guess one thing you could do too is schedule a mock examination. That's where you have someone come in and they, um, kind of like the term, in the technology world, they use white hat hacker, where it's somebody that will expose a, security flaw and then tell the company about it so it can be fixed. A lot of times companies will hire consultants to, perform that audit, and come through and sort of put you through your paces. So that way, ahead of time, what may need to be, changed or enhanced or updated. Penetration testing is another example of that. That's where somebody will, see, you pay somebody to see if they can intrude into your systems, or, even physically intrude. One of the things that we used to do as part of the penetration test is someone would dress up as, the Orkin man, or, a pest control specialist, and just, walk into an office. And again, they're retained by the company, so they want to see, you know, is somebody, stopping and challenging this person, like, who are you? Can I see some credentials? Did you sign in? Are you escorted? Or does they just, walk in and start, looking around and seeing what they can take. So, um, scheduling, those types of, uh, reviews, I think could be helpful, or even doing it, on your own. Like when I was, working in a past life, I used to live with the guy who did IT, and we kind of did a mock phishing exam where we would um, you know, reach out and pose as a legitimate source, but really we were seeing if we could catch anybody in a phishing snare, and there were a couple people who, you know, ultimately fell for it. And so we had to remedy that. Like, we need to go through some additional training, information security to, make sure that you're, aware of this because it's better to be caught, you know, by the good guys. Because, we're here to help you, fix that and get through it. You know, going to the doctor, right? You want to go to the doctor, or the mechanic or whatever when you're healthy too, because that helps you from doing things that are going to make you sick. Once if you only go when you're sick, then you know it
A
can be a
little
long.
preventative care goes a long way.
Yeah, it sure does. I mean, if it ain't broke, don't fix it. I mean, you know that's a fair comment, but that doesn't mean don't check. You know.
Yeah. For anybody that is, interested and kind of feeling overwhelmed with this compliance piece of the puzzle or audits, maybe they're coming into a new audit season for themselves. How does licensing store support companies and what can you offer?
Sure. So we started out as licensing store is the branding that we picked to handle one of our core verticals, which is NMLS licensing and um, being you know getting licensed and then staying licensed. But the name of the company is founded as experts, and that's meant to convey a much broader and wide ranging area of topics that we cover. So that includes again the state exam assistance, exam prep, um, assisting with preparing company policies, loan file QC. A lot of companies don't necessarily uh, perform loan file checks post closing because, again, this helps identify potential issues that you can fix before the examiner gets there. So we do some of that. Also, are working on or have had people help businesses set up their accounting and payroll function, trust accounts for escrows and impounds. We have a product called Correspondent Launchpad, where if you want to make the jump from broker to your non-delegated core, we can help with that in terms of getting you connected with your warehouse bank reps and your fidelity bond and a CPA to do your financial statements. So it's not just licensing. That's the genesis or how people often come to us is because they, had a great idea. I want to start my own business. Can you help me get licensed? Yeah, absolutely. You can have to stay licensed too. That's not the end of, the inquiry though. And so once you get to that point, we offer opportunities to continue to engage with those businesses, and really offer them, uh, not just compliance advice, but also risk mitigation advice and doing it in a pragmatic way. Um, that means, really understanding, the, nature and essence of the business now, where you want it to be, you know, how do we get there? How do you want it to get there? This is what we've seen work. This is, what we've seen, not work so well. And they'll really have those, ongoing discussions. I mean, you know, I would say, our core, skill set, isn't like licensing only, that's just the seed. Our core skill set is we grow mortgage companies is what we do. And, we have had, any number of companies that started out as, just one, individual or one or two that, were maybe great salesmen, you're great, entrepreneurs. We certainly love those types because, they've, you know, got, big aspirations and we want to help them, realize what their dreams are. And, then, you look at them now, maybe it's a year later, 6 months later, and they've grown from, we're just, a couple of guys in a small, Regis office to now we, have a very large one with 100 loan officers, and we've got 4 branches around the United States and, you know, multiple warehouse lines. I mean, we remember, where they were when they started. I think everybody here takes, a great amount of pride in, you know, helping those companies grow and become successful businesses. And that, you know, goes beyond, you know, the licensing, goes beyond compliance, goes beyond everything that's been mentioned here. Um, if all of those things are important and they're key elements, but we also remember that you're a business, and what we're really trying to help you do is achieve whatever your dreams, or your goals are for your business. It's not on me to tell you what those are. I mean, yep. Some people, they don't maybe want to, have a lot of staff. They're, kind of content with a, smaller, more private, clientele group. I mean, okay, great. Like once we know that, we can, help you, nurture and grow that, with, that in mind. And if, that should change, I mean, we are, you know, constantly sort of asking that question too is, what are your goals, now, they're still the same or has it changed?
Well, and I also think, like, regardless of the size of the company, audits are going to come. And when you get an approval for one state or you've gotten your 50th approval, that's not where the maintenance ends. It's where it just begins for a company. So having somebody backed into your corners for quarterly reporting and onboarding as you're growing and maintaining you through renewals and ensuring that your surety bonds are updated, getting support with the QC loan files and things of that nature, having a resource that you can pick up the phone and talk to a human being and say, "Hey, I'm thinking that this is a next step that I might want to take. What do I need to be thinking about? What am I not aware of?" is
Yeah,
is crucial.
yeah, it really is. And, um, I think just, kind of expanding, uh, upon that. I mean, you know, one of the things I think is great about our staff is that, we've been there, right? Um, take, I mean, I know, you from, a long time ago and myself, I mean, way back in the day, the- I was, an attorney, working in regulatory compliance, but it was a smaller shop. And so, I was also helping out clear post-closing conditions or filling in for the funder when, she went on vacation. Or, managing the human resources department, whether that was by committee, by myself, or with a team of people. So those operational challenges, I mean, we have experience with that. I mean, we've been there, we've been in your shoes. And so um that's what we try to position ourselves as, is you know a resource, you know beyond the compliance and the licensing questions. I mean, that's again, the core and what we fall back to. But when I keep mentioning, pragmatism, um that's, with an understanding that, you know, this is a business at the end of the day, and, not all of it is, strictly the alphabet soup of mortgage compliance. It's, you know, human capital. Who should I use for a payroll vendor? I'm having this, dispute between these two employees, because one called the other a name. I mean, you name the issue, right? Somebody, says that I'm infringing on their trademark. I mean, these are all things that we've, experienced, and have, you know, been through, not, looking at it through a petri dish or, in some sort of academic setting, where it's a case study, we were the case study. I mean, and
We lived it.
yeah, and so there are solutions that, are available that, maybe aren't talked about, you know, in the book, that relate to, propose, like, have you ever considered doing X, or approaching this, problem that we're having this way? Um, and sometimes it's a wholly different from, the, maybe three options that, they've been considering because, that's what they were told to consider. So drawing on the experience of, you know, the staff, Kathy, Deuce, who spent many years as, director of, enterprise risk, and was also a law officer in her own right, and, pretty good, underwriter as well. I mean, she's been through, those things. I mean, you know, the battle scars that we have are real. I mean, because we earn them, and so, you know, we speak from experience, and, we try to, impart that so our clients can benefit from, that experience.
So if somebody wants to get in touch with Licensing Store to get more help with staying compliant and audit support, how can they what's the best course of action for them to take?
So any number of ways, really. I mean, I always, like to tell my clients, give them my personal cell phone number and, reach out to me 24/7. Uh, quick anecdote about, again, a past life. I had a guy that I worked for who, it was a loan officer and, very highly motivated, sales individual. And, this is back when he was a smaller shop, and, he had, the office line forwarding to, his cell phone, right? And he was always tells the stories, out somewheres, late at night, they were whatever closing down, the bar wherever they were at, and, the office line rings through to his cell phone. Well, it's 2 in the morning, right? Um, and what it was is it was a pilot who had just landed at, I think it's Detroit Metro Airport, and, you know, pilots, carry strange hours. So, he wanted to inquire about a mortgage, figured that he was just gonna, leave a message because he was gonna be there, right? Imagine his surprise when somebody answers the phone and it's 2 a.m. And anyway, the guy who answered the phone, one of my mentors, he took, this is back when, you could take loan applications in a much more, consistent way, but we took a cocktail napkin out and a pen and, took a quick application down, in terms of, name, contact number, was able, look at a rate sheet, like, get, some basics, and, I'll call you tomorrow with, more details. That pilot has referred him hundreds of people since. And as kind of a token of that, he's got that cocktail napkin framed in his office, sort of as a reminder. So, um, you know, that's a long-winded way of saying, I mean, first of all, if you want to get in touch with me, uh, email me, Ryan@licensingstore.com, or, call me on my mobile at 586-531-1826. Can also reach out to us at info@licensingstore.com. We have, you know, dedicated, sales director who, is just as passionate about, as we all are. And then, obviously, subscribe or follow us on LinkedIn, social media. We often post, bulletins there. And you know, any number of other ways that you can think of. We're always happy to be of help, and a lot of times if it's just a quick question, I mean, we're happy to provide a quick answer. No obligation. To sign a contract or anything. Because the idea is that eventually, we'll provide the high quality level of service, and we hope that that person would continue to come back and eventually want to engage with us full time. Um, those are the immediate ways that come to mind for me. Whether you got anything to add to that, but that's that's what jumps at me.
Yeah, no, that's perfect. Well, that's all the questions I have. Thank you so much, Ryan, for being on and sharing your insights and your life, um, the things that
Separate.
you've actually experienced with us today.
All right, that's a wrap on episode 16. Thanks for listening to Approved AF. Audits don't have to be scary when you're prepared. If you want your company compliance on autopilot, check out our monthly licensing management program at LicensingStore.com. Be sure to subscribe to the podcast and follow us on Instagram for more insights. Every episode is designed to keep you staying licensed, staying compliant, and staying approved AF.